As investors, we are always chasing the next big investment. This could be the next up-and-coming cryptocurrency, the newest, highest cash-flowing property strategy, or the latest IPO'd tech company which is going to the moon. But which one of these three is the best? Is it the new kid on the block cryptocurrency, or the tried and tested property investing, or do you dance with the fat cats on Wall Street and start investing into the stock market? Well, I'm going to give you my take on this question, which is often debated within investing circles. For those who do not understand each of these investment classes, I'll give you a brief breakdown of each one. Then give you my opinion on four main areas which I think are key to look at when you invest into anything. With these being accessibility, which is simply how easy it is to invest into these classes. Then risk, which is how volatile or risky it is putting your money into it. And then the last two are going to be short-term returns and long-term returns, with short-term returns being less than 6 months and long-term returns being longer than 5 years. And of course, none of the information in this video is financial advice, so make sure you do your own research before parting with any of your hard-earned cash. Because after all, I'm just some random fella in his office making YouTube videos. For all the new people here, welcome to the channel. I'm Jim. I'm an investor who's documenting my journey to financial freedom from my day job. I'll be breaking down everything to do with property investing, investing in general, and getting a better grip on your personal finances. So if you're like me and want to grow your wealth, then please do not forget to subscribe to the channel and turn the notification bell on so you know when I post new videos. First up, we have the newest kid on the block, which is cryptocurrencies. Now, it was 100% outside of the scope of this video for me to break down how everything works within crypto. And being honest, I probably won't be able to anyway. So if you're brand new to crypto, I will pop some really good resources in terms of videos and podcasts in the description for you to check out. But with that said, I will give you a brief overview of cryptocurrencies now. Now, a cryptocurrency is a digital asset based upon a network which is distributed across a large number of computers. Now, the fact it's distributed across a large number of computers means it's decentralized, meaning it's outside of the control of governments and central authorities. Now, all cryptographic, which is the crypto part, means is encrypted. Similar to the way your messages on WhatsApp are encrypted, meaning that WhatsApp, along with anyone else, cannot see your messages. Now, cryptocurrencies work on a blockchain. Now, it might seem complex, but a blockchain is really simple to understand. It's essentially a type of database, which, as we all know, is used to collect information on a computer system. These databases can be used to search and filter for information in an easy manner. So all of the transactions to do with cryptocurrencies will be logged, so you can see when the last transaction was. You could also, for example, see when the latest Bitcoin was mined. Everyone on the network has access to this. This means the whole network is decentralized, so no one person can control it. Basically the opposite to most governments and financial institutions at the moment. You can also use cryptocurrencies to make secure payments, which will be represented on the blockchain. Now, the biggest and most well-known of all the cryptocurrencies is Bitcoin. Now, Bitcoin has a fixed supply, so there will only ever be 21 million Bitcoins, which is why it often draws parallels to gold, as we have a fixed supply of gold. Bitcoin currently has a market cap of over $1 trillion, meaning it's bigger than most of the world's companies. Now, there are a whole raft of different coins and tokens in the space, all doing different things for all different reasons. But the market has exploded since Bitcoin was born in 2009. In fact, no one knows who invented Bitcoin, but the group or individual goes by the name of Satoshi Nakamoto. And it was widely believed that the invention of Bitcoin was an indirect response to the financial crash of 2008. Now let's jump into investing into cryptocurrencies and my thoughts on it. And in order to be open and honest, I do invest in crypto, and I hold mostly Bitcoin and Ethereum, the two largest, and I have a small position of Cardano as well. So how accessible is crypto investing? Well, personally, I would give this a 9 out of 10. I think it's super easy to invest into. All you have to do is download an app like Coinbase and fill in your details and you should be good to go. It's really not hard. They might have to conduct some ID checks, but outside of that, you can get on with it within a day. Do you need lots of money to buy into crypto? No. This is in fact a major advantage of crypto. It's highly divisible, which means it can be cut down into any fraction. So if you want to purchase £10 of Bitcoin, you could do that. So I think it's super accessible for most people to start investing into crypto. So how risky is crypto investing? Well, this is where it really comes into its own, as it's super risky. The price can fluctuate massively within the space of one day. It's not unusual for the price to go up or down by 20% in 24 hours. This takes a certain amount of emotional mastery as an investor, as literally 1 minute you can think you're the next Warren Buffett, then the next minute you're selling a kidney on eBay. Personally, I think you should not invest any money into crypto that you're not willing to lose, And when I mean lose, I mean the whole lot, as the price of the asset could drop massively. Crypto investing is certainly not for the emotional investor. So now we know what the risk is like, what do the returns look like? Well, in the short term, it could be 10 out of 10 or 1 out of 10, as you could end up making your money many times over or losing it all. There are certainly lots of people who've made lots of money in the short term when it comes to crypto. I would certainly not recommend people doing this in the short term, as it's super risky. So I would leave short term returns at 5 out of 10, because so much of it is trying to time the market, which personally I'm not a fan of. I prefer timing the market instead. What about the long term returns of crypto? Well, it's hard to say as we do not have that much data, given the fact Bitcoin was only launched in 2009. But personally, I think it's going to be one of the best performing asset classes over the long term. So I'm going to give it a 10 out of 10. This is mostly due to the underlying blockchain technology and the fact for so many people across the world it represents a proper store of value. But the best investment over the long term you can make is to invest into the subscribe button on my channel. It's completely free and it'll be the best investment over the long term, as I'm going to keep you up to date on all things property and investing. The next investment class we have is property investing. Now this one is slightly easier to get your head around when compared with cryptocurrencies. The premise of property investing is simple. You purchase some land, normally with a property on it, and then you rent it out to a tenant. Now this tenant could be a family or a business, but they will pay you a fee each month to live inside of the property. There are a whole range of ways to invest into property. Some of them include the following: Airbnb, HMOs, commercial property, buying your own house, buy, refurb, refinance, rent, lease options, and flips. Now if you want to know how I have ranked these property investing strategies, along with many others, then please check out my video, the best property investing strategies ranked, at the end of this one. Now property has been one of the most steadfast investments over the long term, with prices in the UK roughly doubling every 10 years. Not only this, but we have information regarding property prices going back all the way to the Doomsday Book, which is often known as the Great Survey and was conducted in 1086, noting a whole raft of information about the country, including the price of land. So how does property fare for accessibility? Well, actually not very well in my opinion. It is generally hard to invest into property, as normally you need lots of upfront capital to do so, with deposit pots being around 25% of the value of the property, which could be anywhere from 15 grand all the way up to 100 grand. So it's not easy for everyone to get involved into. But something which I think most people forget is your own home is a property investment. So this is actually a perfect place to start. Now, don't get me wrong, not everyone is in the position to be able to purchase their own home. But for some people, this is the perfect place. So I'm going to give property investing a 4 out of 10 when it comes to accessibility. Is property investing risky? Well, of course there's risk attached to any investment, but as they go, I think property is pretty low risk. But so much of this risk depends on the time frame you're going to give yourself. 100% over the long term, property is super low risk, as generally prices go up. But overall, I'd probably give property a 5 out of 10 when it comes to risk. I think one of the best things about property, unlike crypto or stocks, is you can't see the price for every single day. You can see the price of your crypto portfolio or stock investments on your phone every single day, where you don't have this instant feedback on the value of your asset on your phone when it comes to house prices. Now, being honest, I do not think the short-term returns in property investing are there. It can cost a lot of money up front to purchase somewhere, and then you'd have to do a refurb on top of it. If you're looking for short-term returns, property investing is probably not for you. With one exception though, and that would be doing flips. A flip is where you purchase a house, normally somewhere which needs loads of work doing to it, and then sell it again. Now ideally you'd want to do this within a short period of time, less than 6 months ideally, but you should always allow yourself more time. You can make some good money by doing flips, but it's not without hard work. So overall, I would give property investing a 2 out of 10 for short-term investing. Now when it comes to the long-term investing, what would I give property? Well, personally, it's another 10 out of 10 for me. The main reason for this is because we have the track record of it. We can look back at property prices and see how much they've gone up over time. This is why if you speak to your parents or grandparents, they will tell you they bought houses for a fiver and now it's worth a few mil. With property prices doubling normally every single 10 years, it's easy to see why historically so many investors have poured their money into this investment class. Finally, we have stock market investing. I don't know why there's this big perception around stock market investing that's really complex and it's for people who live in big cities like London or New York. But let me assure you, it's really not that complicated. A stock is simply a representation of ownership of a fraction of a corporation. Normally, this will give the owner of the stock the right to a proportion of the corporation's assets and profits, which is linked to how many stocks of the corporation they own. Normally these stocks are bought and sold on a stock exchange, which is simply where people exchange stocks. There are many of these around the world. We have one in London, there's another one in New York, and loads of other cool places around the world. From the corporation's point of view, the reason they would issue stocks to sell is so they can raise funds to operate or grow their business. Generally, there are two main ways to invest in the stock market, and this is via individual stocks or by investing into index funds. So investing into individual stocks is you going to buy one stock of Google or Amazon, whereas investing into an index fund is where you'll invest into a fund which is normally provided by an asset manager like Vanguard, who will invest a tiny bit into every company on an exchange or an index. For example, the S&P 500, which is the 500 largest companies in the US. This fund will invest a small amount into each of these 500 companies. The main aim of this is to track the whole performance of the market instead of just one stock on its own. When it comes to accessibility, stock market investing has literally never ever been easier. You can download an app on your phone and put in your personal details and you should be good to go after that. I use an app called Freetrade, which is super easy to use. And if you sign up with my link in the description, we both get a free share. And who doesn't like free stuff? Outside of Freetrade, there are lots and lots of different apps which are simple to use. Not only this, but you do not need massive amounts of money to invest into the market either. You can get fractional shares, which is just a fraction of one share. So you could literally start investing with a tenner and that will get you started. From this point of view, I love stock market investing because pretty much anyone can do this. So for accessibility, I'm going to give it a 10 out of 10. How risky is stock market investing? Well, I think it can be pretty risky, particularly if you invest into individual stocks. Personally, I think you need to do lots of research into the company you're going to invest into. Being honest, I only invest into a handful of individual companies, as I do not have the time to research loads and loads. So generally, I like to invest into index funds mostly to keep it really simple and easy. Obviously, when compared with something like crypto, it's nowhere near as risky, but it can still go up and down, and most of the time, it seems it's based on the way the wind is blowing. So overall, I would give stock market investing a 5 out of 10. Short-term returns can be pretty juicy when it comes to individual stocks, but you need to have your eyes on the prize and know when the right time to sell is. This is a pretty risky game in my book, as you're trying to time the market instead of having time in the market. So much of this is trying to ride a wave. Personally, I'm not a fan of doing this, but if you time it right, short-term gains you can get from stock market can be pretty decent. So I would give it a 6 out of 10 for short-term returns. Now for the final one, I'm going to talk about long-term returns. This is another banger. If you hold the right individual stocks or index funds over the long term, you can get some naughty returns. Imagine if you bought into Amazon when it was $15 a share. It's now worth over $3,200 per share, which is a crazy return. Even if you aren't picking one of those companies, I still think the returns you can get from an index fund over the long term can be boss as well. Typically, you will average around 8% from the S&P 500, which if you just leave that money and let it compound over time, you'll be onto a winner chicken dinner. So I'm going to give this one a big fat 9 out of 10 for long-term returns. So which one of these three am I going to pick as the winner of the scrap? Well, I think the winner is all three. I give all of them a high score for long-term returns, and I think a good investor should have exposure to all three of these asset classes. You do not want to be over-leveraged into one asset class, because when it goes through a dip, you might not be able to keep your head above the water. Whereas if you spread across the three, you might have a better chance of riding it out. For example, if property is down, crypto might be booming. I think by investing into all three, you will get a good blend of all areas. Crypto is new and an up-and-coming technology. Property is tried and tested and always gone up over the long term. And even within the stock market, you can get pretty diversified. This is what I do personally. I have a decent amount in crypto and my LISA and ISA. And if you want to know the easiest way to get £1,000 for free, check out the video at the end of this one I made. And I have my house with my girlfriend, and I'm also looking to buy my first buy-to-let. So if you want to follow along with that journey, please do not forget to subscribe to the channel. And I'll see you guys in the next one. Cheers.